Madan Sabnavis, Chief Economist at Care Ratings, joins in. We also have breaking news with respect to the core sector data for the month of December that's out. The core sector data has declined in the month of December to 2.6%. The 8 core industries growth from April to December, though, has come in at an encouraging 4.8%. I'll give you the breakup, but, after the kind of number that we witnessed in the previous month gone by, where it was at a 16-month low of 3.5%, now the overall December core sector number has come in lower than that to 2.6%. Madan, what is your assessment?
No, I think it's once again clear if you look at the breakdown of this number that it's only cement and steel which are the two sectors which are doing well, and this is being driven primarily on account of the government spending. And so far the government has been spending well. I think that's also getting reflected in the higher fiscal deficit number which we have seen. And any kind of compromise on capital expenditure for the rest of the year will definitely have a negative impact even on the core sector data. And we have also seen that normally when you're looking at a number of 2.6%, number for IIP for the month is not going to be too encouraging, and I think it will probably remain in the region of 2.5% to 3%, contending also that with a high base effect which will be there in the month of December.
Right, fair enough. So let's just break it up. The steel output has grown quite comfortably, double digits of 13%. Fertilizer output at a negative 2.4 versus the contraction of 8% last month. Refinery products, though, that's where you've seen a decline of nearly 4.8% versus 2.3% growth last month. The natural gas output has been steady at 4%. Crude output, though, has declined nearly 4.3%. So just looking at the overall breakup, how are you assessing the overall growth that we've seen? Does crude output come as a surprise to you given the kind of decline we've seen?
Yeah, crude has always been declining over, I think the last few months it's been declining continuously. So that as well as natural gas doesn't really come as a surprise since we have seen these low numbers. And that's been the problem in all these three segments of crude oil, natural gas as well as refined products. And I think refinery products also getting into the negative terrain this particular month. I think it's come negative. Would also mean that we cannot. It's also gels well with the export numbers, which are not being too encouraging on this side. Which is also but natural when the crude oil price starts coming down. We also see the refinery products get affected on the export side. So I think it's a reflection of a combination of these factors. And in terms of fertilizers, where we are seeing again continuously negative growth numbers, I think the import of fertilizers is something which is acting as a kind of a substitute. And because normally at this particular point of time, we should be seeing higher growth given the fact that the sowing season is on during November, December. So these numbers are definitely a bit unsettling because they do not point towards robust industrial growth for the rest of the year too.
All right. Thanks very much then, Madan, for giving us your perspective as to how you've read into the kind of numbers that we've seen for the core sector data, which has slowed quite considerably, coming in at a level of about 2.6% for the month of December.